How to know when a trend line is used as a drawn liquidity in the market, right? Meaning where the market will definitely go to that thing and disrespect the trend, right? Where you could say, example, one touch, two touch, and three touch, eventually where the market do it did a huge explosive move to the upside. That right there is like prime example of a drawn liquidity of, it's like a trend line being used as a drawn liquidity. So today we're going to be going over when does a trend line becomes a drawn liquidity, where the trend line will get disrespected and get completely ran through, right? And one key note, just a couple key notes, right? One thing is that a trend line, to me personally, of what I heard from my mentor, 3 touches, or you don't have to be 3 touches like perfect touch, but 3 trend, right? Like trend lines, right? 3 liquidity lines. What creates 3 or more is what creates a trend line, liquid trend line, right? If it's less, no, right? But other than that, what else creates a trend line liquidity? No, other that's one factor check. Other one is that if a trend line has a auto block that has not getting touched, usually what I'm talking about is an hourly time frame, not lower time frames, right? Hourly or 4 hour, right? When there's a trend line in the hourly time frame or 4 hour, and those trend line liquidity has auto blocks that has not been used. So let's just say there's a trend line to the downside and to the upside, right? It all depends. One of them could become a drawn liquidity because now you don't notice too, right? So how you know which one become, right? So you might just take a gamble on each side, right? Which we don't want to do that, right? We want to be precise with our decisions, right? Because market won't pay us with our, just market will pay you based out of your decisions, right? So you want to be correct on this, right? So nothing is 100%, but having a higher win rate than 50% is good, right? Like 55%. I mean, at least you have 5%, I'm saying, over the 50%, right? So as a trend line drawn liquidity, what you want to know about is 3 creates a trend line liquidity, right? 3 buys a liquidity or sells a liquidity, creates a trend line liquidity to the upside, right? And if the trend line liquidity has a auto block, that right there cannot be the trend line drawn liquidity, because if you know what I'm talking about, is where there's a trend line liquidity and the market, every time when there's an auto block that has not gotten touched before, will always accumulate. Eventually will go up to the drawn liquidity, but it will accumulate, and the accumulation pace of the trend line drawn liquidity is kind of annoying, right? You might get stopped out, such and such like that, right? So, and other than that, 3 touches make of it. And whatever, if there's 2 trend lines that's colliding with each other, meaning there's a trend line to the upside or downside, it all depends on which side the auto block got touched first, or which side auto block all the auto. Let's just say, so the trend line to the downside, right? And this trend line, when it created basket liquidity, never created a auto block, right? But this one right up here, this other one created an auto block. This auto block got used right here. Perfect example where the market won't go up here. If the market's over here, market definitely won't go there because there's an auto block supporting the basket liquidity, right? With that, what did the market do? So now there's no accumulating, right? The market did not accumulate. But look, for example, we're gonna get over there where the market right here created another basket liquidity, right? Now this one has an auto block right over here. You can see now this one has a auto block right over here. Auto block. When the market touches auto block right over here, right? What did the market do? Eventually just went up here. It never took out the basket liquidity. You can see right over here. Market just went up here, accumulated a lot, right? Accumulation pace happened, right? So throughout this auto block, when this got touched here, look what the market do. It did do a move down, but is it a big move? No, we want to be catching, perfect moves, right? Now, what did the market do? Push up into this basket liquidity. What did the market do? Eventually accumulated, which we don't want to be at. We want to catch a big move like this to the upside, boom. And what caused that big move to the upside? This is a perfect example of the sell liquidity right over here. Push caused it to go up to the upside, which I think this is where he was Powell speaking. But you know how the market goes. Obvious drawn liquidity was over there. To the downside, you can see probably saying, well, isn't this one of the basket liquidity? Didn't that trend line get broken over here? Not really, because the trend line is all over here and this is over here. That's not colliding with the trend line, right? It's not near the trend line, right? So this right here couldn't be it. But now we have a trend to the upside. 1 touch, 2 touch, 3 touch, right? Now let's go over which one got touched first, right? So this one got touched first, right? Then eventually there was no trend to the down, there was no trend to the upside, right? So there was none, so we can't count none until the market created this possessive liquidity. Or you could count this as well if you would like, but I'll probably say, let's just say we counted this other one right over here. And let me delete this real quick. I think, let's just say we counted this as a trend line. Let's just say this is right here with the startup of the trend line, right? Which looks like to be it, right? So now from here there's a trend line. So now it matters of what order block gets touched first. So now this one got touched first. Now on this one, the market touches other order block to the downside, right? To go to the bullish side, right? This order block got touched. Now what's the next obvious one? Obviously this other order block, right? Right when this other order block got touched. Now from here, what is the next obvious one to get touched, right? What's the next obvious order block to get touched that can push the market back up? Because this right here, now over here there's a trend line happening to the upside, because it created 1 low, created 2 low, and eventually created 3 low, right? Now this second one got touched, right? So now what's the next obvious one? It's either we get a deeper move into that order block that can change and draw liquidity back to the downside, right? Eventually, what does the market do? Create another order block, where the market retrace back down to this other hourly order block. And what happened now from here? Now this side, when the market went to up to the order block, filled the order block even more, right? Now accumulated a lot, eventually touching the other trendline order block, right? Now from this trend that goes to the downside, doesn't really have anything left now. Now it doesn't have a order block left. This order block got used. This order block got used, right? Now this is the fresh one. It just got touched a couple hours before at 6 a.m. right? Couple hours before, you know, market open. So now then what's the next obvious one? Market did a huge move right back down because there's a bunch of liquidity, the sweep of liquidity that happened over here, caused the market to go back down. From here, this right here, a lot of people have taken a long over here, because now this trend liquidity has a lot of factors on it. Let's just say that wouldn't be the sell stop, but you know what I'm saying, it's act like we took a trade on there, right? So on this day, right, this is how a trend line became a drawn liquidity, because you had 3 things in common, right? 3 touches, which was 1, 2, 3, right? Now this is 4, right? 3 or more makes it a trend line, right? With that, all of the downside trend line, right, got used. So this order block, the order blocks got used, right? So this order block got used, this order block got used. Now there is none. But to the downside, there was one here that got used, this one here that got used, this one right here, this one got touched first, right? So this one right over here, the next, this trend line order blocks, all of them are broken from start of here. This is just an extra touch, right? Which it's not necessary, but you know how the market moves, right? So yeah, this was just unnecessary. All these trend line got broken. Eventually the market needed to take out all the confluence before, if the market's gonna move up to this order, to this trend line right over here, right, to take it, go to the start of the trend line, the start of the trend line drawn liquidity, the market needs to do a move down before we can go and move up, right? How can the market move up without a move down, right? You need to gather liquidity, where the market went down here, fill the provide gap in more, which already got filled so much. So it's not because of that, it was solely because of the sexual liquidity sweep. After that, boom, take a long somewhere over here, go for the start of the trend line drawn liquidity. You could have gone over here to this one or this one, but this one has complete, you know, saying correct three touches of the buy side liquidity, right? With this, right, what you're gonna want to watch out from is you do not want to force a trend line, right? So you don't want to force an imaginary trend line, like you already a trend line here, let me go into this, right? That right there will usually mess you up. So when you're doing trend lines, make sure you guys are using it right, because although there might be a trend line, market just might move against you. It all depends on the 4 hour, right? In this day, right, why did this trend line right over here became a drawn liquidity, right? And you can see there's a huge 4 hour provide gap. So in the next obvious drawn liquidity to the downside before it goes to the upside, right? Because the market just filled the provide gap in all the way, and the market still moved up. And some of these type of scenarios where this right here is gonna be the obvious trend line, because all of the 4-hour trend line bias is looking like it's gonna be supposed to go down before going up. Well, there is a trend line happening to the downside without any order blocks, right? And to the upside, there's support right over here. There's order blocks supporting it, right? And this side there is none. So that's a perfect example of it. You know, trend line drawn liquidity. All of the 4-hour time frame told us it can go downside, where the market do pumped right back up, right? So yeah, these are the only times when a trend line becomes a drawn liquidity, where there's no order blocks left. And the other side, let's just say there might be a opposite trend line drawn liquidity. If there's a trend line that happens to the downside, there's one to the upside, and the upside is winning, you know, and then there's order blocks supporting it. That challenge to the upside cannot become the drawn liquidity. The one to the downside can become the drawn liquidity, because all of them are used and there's only liquidity left, where the market is going to move a little down, take out some sort of liquidity, eventually just crashing through right through the trend line, right? And you can see another example, right? 1 touch, 2 touch, 3 touch. Now from this is all extra. So now we can see it over here. Now over here there's a trend line happening to the downside. So we got 1 box of liquidity, 2 box of liquidity, right? Now this box of liquidity, what do we have? A hourly order block, right? So now what's the next obvious drawn liquidity? Right to the downside. The drawn liquidity cannot be to the upside. Why cannot be to the upside? Obviously, if you pair this up with the 4-hour drawn liquidity rule, the 4-hour liquidity is bearish, because well, there's a fair value, and then the next obvious one is over here or below to this order block, right? So now what the market just do, this hourly, this right here could not become a drawn liquidity, because why? This one supports, this one has a order block supporting it, right? Which got touched right over there. And this one right here, as we know, why did we go for this as a take profit and not all the way down here? Very simple. This one has a relative equal lows, and as we know that relative equal lows and highs are one of the drawn liquidity in the market, right? And this right here was obviously gonna be the drawn liquidity. Eventually, as you can see right over here, 1 touch, 2 touch, 3 touch, 4 touches right now. This has a 4 touch, and this 4 touch, what does the market have on over here? This one has an order block. You see the market eventually, what the market do on this order block? Ranged, right? It accumulated in range, where we don't want to be trading around here, right? But during that time, what was the 4-hour drawn liquidity, right? 4-hour drawn liquidity on during this time was what? Bullish, because market set the liquidity, right? The next obvious drawn liquidity can be up here, and up here, right? So you could see there would literally been no trade to take over here. Personally, to the way I trade, there would have been no trade here to take. Market just accumulated for a long time, took out more liquidity, eventually taking out this other liquidity which we didn't want. Market closed right below it. Eventually, just price action pushed it up to the upside and took out the drawn liquidity. Right now, from here, this order block got used right over here. You can see this order block got used. This order block got used. This order block got used. Now there's nothing left. Right now, there's no order blocks. All of the order blocks got used. So now the next obvious drawn liquidity won't be here, straight be right over here, because that is the start of the trend line, and that trend line to the downside has no order blocks supporting it and making it a not drawn liquidity. But over to the downside, market set up equal lows and equal highs, and next drawn liquidity obviously right back to the upside, right? Market pumped up here, accumulated to this range, because no, this one had a order block in it. And as we know, if the drawn liquidity in this time, right, the drawn liquidity in the 4-hour time frame was bullish, right? But there's a trend that had to the downside, which had a, how can I say that, which had a, you know, order block supporting it, but the 4-hour drawn liquidity was bullish, right? When stuff like that happens and the drawn liquidity and the order block, the order block gets touched before market open, usually more before London open or New York open, which is 8 a.m. or 2 a.m., right? You see, when it gets touched before that trend line, order block already got used. Now there's none left, right? So if there is a order block that has not gotten touched, right, we'll go for that order. We'll go for that order block that may take profit. I'll give you guys like a perfect example of what I mean by that, and yeah, I'll show you guys what I mean by that, right? You can see right here, there's no order blocks left. This order block got touched what time? 5 a.m. right? That's before market open. The kill zone is over, right? There's no more kill zone. The market has ended. Now the market is went to New York. eventually touched it, did a huge move back down, boom, right back up, right to the upside. Now I'll give you guys more example of this over here. So market had 1 touches, 2 touches, and 3 touches. Now we're looking for how did the trend line get broken. And we had a trend line to the upside, 1 touch, 2 touch, and eventually 3 touches, right? This sort of upside one, what did the market have? A order block, and eventually another order block which supported this other trend line. You can see this market never moved below this, because what did the market have over here? Another order block, right? But to the downside trend line, right? What did the market have? 1 touches, 2 touches, 3 touches, and guess what? Order block got used. What's the next obvious trend line? This is the trend line happened to the upside. The next one was over here. This order block got used, or you could say this one as well, because it's close above there, right? Let's just say this one right over here, boom. Now the next one obviously is right back to the upside, which is this right over here. You can see market started ranging over here. You can see the market started ranging. Now market pumped up a little bit, didn't disrespect this. It's still, you know, market still ranged a little bit afterward. What are the next obvious drawn liquidity? Not drawn liquidity, like, you know, drawn liquidity is basically the objective of the market. It was over here. Now from here to the upside one, now to the upside got touch first, right? Now the next obvious one is to the downside trend line liquidity, which is over here. Now this trend line to the downside, they didn't have no order blocks left, so this one completely got rushed through, got completely destroyed, right? So yeah, that would have been a cool take profit would have gone. What time was this? Yeah, that would have been like during Asian session. Could have taken it long out of this position right over here, out of this order block if you felt like it. You know, saying it taking along somewhere over here. Let's just say we took a little over there, sets up a little sets of liquidity, take profit right over here, going for a 1 to 2 RR. Probably have a better RR depending on your sell stop. That would have not been my real entry, but yeah. With that, perfect. Another example. This one test first. So 1, 2, right? So wait, I did it wrong. My bad. So 1, this one got touched first, then 2, right? Then eventually the next then the next one's back to the upside, then 3, the next one's right back to the downside, then 4, the next one's right back to the upside. This one did not have no order blocks. Got what the market do? Completely ran through it, right? And other than that, now perfect example of that on a Friday, which we took a loss on, right? The market did a trend to the downside, one batch of liquidity, 2 batch of liquidity, and 3 batch of liquidity, right? And this one over here to the upside, probably saying, yo, to the upside has an order block as well. And the 4-hour buys during this time was obviously bullish. This fair value got completely ran through, and this is where was like, to me, was even more bullish, right? Because market touched this fair value gap. This one became run liquidity. The next one is obvious to the upside. This one became run liquidity as well. Not run liquidity, like this invalidated, right? Became a bullish thing. And now you can see there's a huge trend to the upside. What did the market completely dump? Why did the market dump? Just happened. There was a trend to the downside and to the upside. Now let's go over which one got touched first, right? Which one got touched and why did the market move down? Why did this sell side one became a drawn liquidity and not the upside, right? To the upside, 1 buy side, 2 buy side, 3 buy side. With that, to the downside, order block got used, this order block got used, this order block got used, and the freshiest one we had was this, right? But to the downside, what do we have? This order block already got used, right? Now the market made another buy side liquidity over here. Now this order block already got used, right? So now we're gonna go over which one got used versus and why did it get disrespected. This one got, this one, which one got used? There's an order block right over here as well. That's a buy side liquidity. So 1, 2, like in 3, or you can just, this doesn't really count as a trend line because, you know, market is all the way down here like this, you know what I'm saying? And the market really never created another buy side liquidity, so that couldn't be counted. But there was an order block right over here. You can see what the market do right when it touched the order block, started accumulating a lot, right? Eventually doing a bigger move, but with that, the market went up, then pumped right down. So you call this, there's a small ass order block, right? So this one got touched first, then market pumped down, right? Touching, I think I did it wrong. Touch this first, right? No, that couldn't be counted because, you know, that's the start of it, right? Then market pump down. No, actually, yes. Am I right or wrong? So market had a trend to the upside. A trend to the upside had an order block over here. So the next obvious one is right back to the upside. This one couldn't be it because that's the start of it. We don't even know if the trend line got created during that time, right? So this one had an order block. The next one obviously went to the upside. Now this one over here created a trend line to the downside. Now this one had an order block. You can see market accumulated a little bit before popping up. Then we took out this massive liquidity. With that, market pumped right back down. Now from here, this was 1, this was 2, and what's the next one? 3. Now what's the next one? 4. And now guess what? The downside one, the trend to the upside, there was no order blocks left. This order block got used, 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 this order block got used. This one was the freshest one. And now the next obvious one is to the downside, right? Although the 4-hour box was bullish, but guess what? To the trend, the trend that happened to the upside had no order block supporting it. So that's the obvious trend line drawing liquidity. Market dump right down to it. You know what I'm saying? On Sunday, Sunday agents took out the liquidity, and you know, people would have made a lot of profit out of it, right? So you could have taken a short out of this hourly order block. So let's just say you took it somewhere over here. So stop right above that box for liquidity, and you had a huge TP all the way down, all to it to down here. Quick 5-hour, right? And why did this not become a drawn liquidity, right? Because this one got touched first. Now the next obvious one to the downside, but to the downside one, did it have any left? You know, did it have no order blocks left? They just had purely liquidity, right? But to this one got touched, right? So it's kind of complicated, but if you backtest enough, you would know what I'm talking about. So yeah, this one got touched first, this one got touched first, the next one had to get to the touch of the second side, which never got touched, right? This one already got used. This one was the freshest one, right? The next obvious one to right to the downside, which we never had. Over here getting another box of liquidity, and this box of liquidity had another order block supporting it. You see, literally had another order block supporting it right over there. So yeah, this is how a trend line becomes when a trend line becomes a drawn liquidity, meaning the objective of the market, where the market would definitely go to, right? With that, some factors on it: 3 touches make it a trend line, 3 or more touches make it a trend line. If a trend line has an order block that has not gotten touched before, and you're entering a trade, and that trend line does not get that trend line has an order block that has not got touched before, just go for the order block, because the trend line will definitely get, has a high, I don't think it's 100%, right? But you will definitely has a high percentage of getting respected. But if a trend line does not have no order blocks and all of them got used, and let's just say there's 2 trend lines happening, and the one you're entering that goes against the other one, but there's one that goes with you, if the one that goes with you has an order block and the order block got touched, right? And the next obvious one to the other side, right? That other side that has no order blocks left, just go for the start of the trend line, which would have been right over here. And other than that, although even if the 4-hour drawn liquidity told you, yo, it's supposed to be upside, but the trend line happened to the downside and to the upside, the trend line to the upside does not have any order block supporting it, but to the downside it has trend line supporting it, order block supporting it, and that one got touched first, and the next obvious one to the downside, and to the downside one, no, to the upside one, right? So there's a trend line that happened to the downside. The trend line to the downside has an order block that got touched, and the next obvious one to the upside one, right? And that upside one does not have no order blocks left, just has purely liquidity. Market will definitely go to the upside drawn liquidity, which is right over here, right? A perfect example. It's kind of complicated, and when you guys do relative equal lows or equal highs, just go with the 4-hour drawn liquidity, right? The 4-hour drawn liquidity is bullish, but there is a equal high or equal low behind you, up against the 4-hour drawn liquidity. Just go with the 4-hour drawn liquidity. Don't go with the equal relative. You got equal highs or equal lows, unless the 4-hour drawn liquidity tells you you're gonna go there, right? If not, then just don't do it. It's not gonna be worth it. I don't see it working out like that. I see it working very nice when the 4-hour liquidity is going with the relative equal highs or equal lows sets like this. This one right over here has a relative equal lows right over here, but the for during this time the 4-hour box would be bearish as well, and then the trend line have to the downside. The range of all John liquidity gonna be here, so you could have gone for here. You should have not taken a long from here, because you know you would hate take profit, but you know what I'm saying, a lot of people have a lot of rules and you'll probably get stopped out. So yeah, that is perfect example of when a trend line becomes a John liquidity. Thanks for watching.